Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along of the US GDP. Now, before we get into this announcement, which could potentially be a big market mover, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So like I said, good afternoon, by the way, to everyone. Like I said, you are watching a Tixee Live watch-along of the US GDP, the gross domestic product. Now, for those of you who are new to trading and not sure what the GDP is, let me explain to you what it actually is and why it's a key market indicator. Sorry, already I've started. My voice is already dry. Now, the gross domestic product is released by the US Bureau of Economic Analysis and shows the overall value of goods and services produced in that country during a set period of time. Now, this is a major indicator on how quickly a country's economy is growing or decreasing. So basically, it's really telling you the overall health of a country's economy. So this is why it is key economic data. Now, usually, by the rule of thumb, a higher reading, can sometimes indicate that the currency is going to be bullish. So it's good for the currency. So potentially that currency could get stronger against another currency. That is if the reading is high or higher than expected. A low reading, however, can sometimes be seen as the opposite, bearish for that currency. So that currency could potentially weaken against that other currency. So here's the thing. So this is a major thing, but why this one is quite important today is because there is questions on whether or not this announcement will prove that the US is in a technical recession, what is known as a technical recession. Now, a technical recession is when you have two consecutive quarters of negative growth in real GDP. Now, the previous US GDP reading, the previous one, came out as negative 1.6%. So the questions are being asked, are we going to see another negative reading? If that's the case, does this mean the US is technically in a recession? Now, the expectation today in general is for it to come in slightly positive at 0.4%. However, there is quite a few conflicting views on this. Moody's, for example, they predict a 1% decline. However, Goldman Sachs, they predict a growth of 1%. Now, here's the thing. Like I said, there's a lot of different views on this matter and on this data, and it is very. Sorry, my throat's so dry. It is very politically driven. This number, very politically driven. Now, last night. Those of you who joined me for the Fed interest rate decision, which proved to be quite exciting. Last night, Jerome Powell, as he was doing his press conference in relation to Fed's future monetary action, he did say last night he does not believe the US is in a recession. And basically, there is those in the industry who says a technical recession is not a real recession, when we have such a strong labor market. In fact, Wells Fargo's Michael Schumacher, who's one of their top analysts, he says, let's say it's negative. So let's say it's negative. So let's say the result comes in negative. The headline everywhere is going to be a recession. But that's not how the market thinks about it. But you will see people screaming, recession, recession, recession. And like I said, it is very, very politically driven. Very politically driven. In fact, the White House has actually said and come out, maybe they know something we do not know. They said a technical recession isn't a real one. Isn't a real one, in their opinion. So, yeah. So, like I say, it's very politically driven. What else is coming out at the same time, which I'm going to be just as interested in, and I will announce it as it comes out as well, and that is the US initial claims due at the same time. Expectation of the US initial claims is 253,000. Now, don't forget, US initial claims, okay, is the number of those individuals signing on for unemployment benefit for the first time. And those of you who have been so kind to join me on other videos I have done know that I take a key interest in initial claims because I feel that it's a major indicator that a lot of the market ignores initially. Because I call it like a canary in a coal mine. I call it early warning system. And those of you who joined me in the past will know I've gone on and on and on about that we're seeing a steady growth in US initial claims. So I will be talking about that as well. But the big one is all about the US GDP. And let's face it, it's good. Good. Hello, sir. Hope you are well. Thank you for coming along. Thank you. So, yeah, the real one is all going to be about US GDP. Are we going to see the US technically in a recession? Let's wait and see. Now, I've got a couple of scenarios here written down to what I think could potentially happen, all depending on the result of this, obviously. Now, scenario number one, higher than expected number, so strong growth. Potentially, we could see a strong US dollar. Why? Because obviously that's the sign that the US economy is growing. But more importantly, I think the market will see it as this is more of a more reason for the Fed to carry on being aggressive with interest rate hikes. Because don't forget, last night they said their future decisions is going to be based on data and by meeting. So that will see a strong dollar because of that. Scenario two, lower than expected. So lower USD. Why? Because the market suddenly will think for several reasons. One, okay, that lower USD because the market will see, okay, we're bordering a recession. And the fact that the Fed, because that number is weaker, won't be so aggressive. Lower again, if it comes in lower again, another scenario three, okay, potentially we'll see a strong US dollar because the market will rush to dollar as a safe haven because recession for all of us is on its way. And finally, scenario number four is priced in. And we see very little action until the market digests what this number means. So those are the four potential scenarios. But anyway, let's get ready because it's coming out very, very soon, in about 1 minute, in 1 minute's time, in fact. So anyway, I'm going to be looking at gold, obviously. I'll be looking at the dollar, Japanese yen. I'm going to be looking at the euro, and I'm going to be looking at the sterling and the S&P 500. So let's see how we're doing. At the moment, we have been seeing over the last couple of hours a bit of dollar strength. But anyway, let's get ready. As normal, I have my trusty mobile to keep me up to date when the announcement is going to come in. And like I say, I wonder if it's going to be a big surprise. Like I said, there's a mixed opinion if we're going to get a lower number or a higher number. But let's wait and see what happens. And at the same time, let's look at initial claims as well. See what happens with that as well. So anyway, where are we now? We're about 20 seconds away. 20 seconds away. Hopefully, I won't scream as much like I did when we were watching the ECB. Okay, let's wait and see. Let's have a look. Okay, so 5 seconds. Okay, all right, any minute now. Right, here we go. Any minute now should be coming through. Any minute now should be coming through. Okay. Right, let's have a look. Let's have a look, see what it is. Let's have a look. Ready. Ready? Right. US domestic product announced higher than expected at 0.9% versus the 0.4% they expected. So better than anticipated. There you go. You can see straight away gold is on the move. Gold is on the move because, like I say, we're going for slight optimism that the Fed will not be that aggressive because it's not a 1%. It's only a 0.9% expected. So yes, technically the US is not in a recession or a technical recession. So 0.9. Let's go for everything else as well. Let's have a look. 0.9 for that. Initial jobless claims came in worse than expected at 256 as well. Let's have a quick look at the euro, see how the euro did. Euro slight bounce against it as well. Against it there. The cable slightly better as well. Not that much, not that dramatic. Dollar slightly weak on the back of this announcement. Like I say, that is better than expected, but it's still not a 1%. It's only 0.9. So that is how the market is looking at it. And we are not in a technical recession in the United States. So there we go. Let's have a look again, see how gold is doing. Let's have a look at S&P 500. How did that react? Pretty indifferent. But we are seeing action. Bit of action in gold, back trading to $1,743. And the euro as well, slightly recovering at 1.01392. Don't forget, as well as that, sometimes it takes the market to adjust to this and to think about it properly, what this actually means. So initially, we've seen slight dollar weakness, but not over the top dramatic dollar weakness. So there we go. Breaking news. US GDP announced higher than expected. Announced at 0.9 versus 0.4% expected. So yeah, there we go. Good for the US GDP and good for Powell for being right and saying, oh yeah, he doesn't see the US in a recession at the moment. So there we go. Let's see what happens next. Definitely. Don't forget, you can ask me questions anytime you wish while I'm live on air, or simply say hello if you like. I mean, are you surprised by this announcement? Did it surprise you? Were you expecting it to come in worse? Or were you expecting to come in, higher like it has done? Obviously it was slightly under Morgan Stanley's prediction of 1%, but still pretty close to that. It was 0.9. So it'll be interesting to see how the market digests this information over the next hour or so before the US session opens. Because don't forget, of course, the US session opens in just over an hour's time. So it'll be interesting to see how the stock market takes to this information. Definitely. Okay, is there any questions at all? Anybody like to ask me anything? Or say hi, maybe? No? Be interesting to see how the market's reacting to the initial claims as well. Because I know I'm banging on about that a lot. I go on and on about that. But yeah, it's slowly increasing, which is a worrying sign, in my opinion. That maybe the job market isn't as stable as the Fed and everybody is saying. You know what I mean? So that's worrying growth. Okie dokie. Well, don't forget, I'll be back online in a little while, in about just over an hour's time, to cover the US opening and discuss more about this outcome, how the market's reacting to it, and what are the signs, etc. Plus, we've got a massive earnings today. Don't forget, we have Amazon and we also have Apple earnings coming today. And today is actually, to be fair, today's the biggest earning day of the earnings season. I'll explain to you why when I see you again later. So don't forget, I'm back online round about 1 p.m. UTC. So don't forget to come and join me for that. And we can really digest what's just happened together. Okie doke. If there is no questions, not a problem. If you think of a question later and you want to ask, put it in the comments below, either on Facebook or YouTube. I will see them and I will reply to them next time I go live. So do bear that in mind as well. That is an option for you too. So anyway, if there is no questions, don't forget, as I always say, if you're watching me on Facebook and you've enjoyed this little video and you found it useful, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this episode, found it useful as well, by all means, subscribe if you like. If you enjoyed this video and found, again, it interesting, and you've put up with me for being over the top enthusiastic about the markets, which I just cannot help because I love the markets. Give me one of those. It's nice to know that you like what I do. I can see I've got a couple of likes already, which I really appreciate. But it's nice to know that you like what I do. But anyway, till next time, or till later this afternoon, do not forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own due diligence and do your own research. And of course, know the risks at hand before entering any trade. Till next time, every single one of you out there, trade safe.